Mm. Okay, everyone. Hi, hi, hi. Before I continue, I just want to make sure everyone can see my screen, can hear me loud and clear. The chat box is working. Someone say hi to me in the chat box, please, so that I know I'm not just talking to myself. Hello, for those who just joined. Hello, I see new names here today. Okay, I've gotten an email from one of the regulars saying that they have not been receiving the link to join this webinar. For those who are here, can you just let me know how you managed to join the webinar? Did you manage to join from the link? Did you sign up on the website? Because some are having trouble joining because they're not receiving the invitation link. Okay, cool. Okay, got it from registering. Okay, so that's what I thought as well. You guys register and then you guys get the link. Oh, sorry guys, give me a moment. I think I'm on the wrong, um, this is the old layout. Give me a moment, guys. Just sorry, 1 minute. This is the correct PowerPoint slide. So IC Markets after actually rebranded. Let me just change the date on this. This is from last week. I mean, yeah. Okay, IC Markets actually rebranded. They are called IC.coms right now. Okay, so they are IC.com. It's the same people. They just different. They just made the name cooler. Okay, maybe easier to understand, easier to remember. Okay, so sorry about that. I was on the wrong slides just now. I was still on the old one. Okay, so hi everyone. Welcome to today's webinar brought to you by IC.com. Okay, we're going to do a live analysis session. Today's the 8th, sorry, the 4th of August actually. Yeah, today's the 4th of August, and then we are going to do a live analysis session. What that means is that we're going to go into the live charts. I'm going to show you guys how I would usually do my analysis, but it is not for you to copy blindly. Okay, I'm showing you from my point of view, my perspective. You can choose to implement that style into your own trading if you want to. Okay, but you are basically here for educational purposes. Disclaimer, disclaimer. Anything I share in this webinar should not be construed as any form of financial advice, any form of investment advice, any form of signal to get in and out of the markets. Yes, I know that's a little contradictory because we are going into the live charts and I'm basically telling you my entry, my stop loss, and my take profit. But please take it as purely as educational because I can be wrong as well. So please do not copy me. Do not copy me. This is not a copy trade webinar. This is not a signals group. Okay. You are here to learn how I got the analysis in the first place. Okay, so another risk warning, trading in securities involves significant risk. Price fluctuates a lot and your securities can become entirely valueless. So please be cautious. Please do not jump into the ocean before you actually learn how to swim. I'm going to stay here for a few minutes so you guys can actually read through the disclaimer and then we will continue from there. Okay, I think that's more than enough time with the disclaimer. Anyway, it's a simple text. You could read it in like a minute, right? So it's basically just a risk warning, right? Um, I'm going to introduce your host, that is myself. For those who don't already know me, who is here for the first time, right? My name is Cassandra. You guys can call me Cass. It's easier to remember. I am an investment analyst and a prop trader here at Everest Fortune Group. We are a research firm based in Singapore. We have been recognized as the finalist for the best Forex and the best equity research for multiple years running. Okay, what that means is my job as an analyst is not just to go, hi Jamilu. Hey Jamilu, can you let me know? Because no one else is really letting me know. I'm also just collecting feedback. Someone said that they registered for this webinar and they got the email link to join. I'm just wondering how you got the link because I've received um, an email from Alfred, which is one of my regulars. He's here every week, saying that he stopped receiving the link through email. Okay, got it. Thank you so much. I will let Alfred know maybe his email is, maybe it's in his spam inbox or whatever it is. But I mean, to be honest, to be fair, I really don't see the regulars here anymore. So I don't know if it's because they stop attending or because they're not receiving the email. But Alfred told me he's not receiving the email, right? So I'm glad you're here, Jamilu. Nice to see you. Okay, so we're still in the introduction. You've been through this so many times, Jamilu. This is more for the rest of them. Okay, as an investment analyst and a prop trader, I specialize in technical analysis, fundamental analysis, and I combine all that with macroeconomics, okay, to get very high probability setups. I also basically just management of the trade. So if you guys have any questions at all that you want to ask me in the chat box and I will try my best to answer you to the best of my ability. Okay, do not be shy. Ask me anything trading related. The cheat sheet checklist and the analysis session. Okay, so if you are here for the first time and seeing this for the first time, I strongly recommend that you take a screenshot right now. Okay, so 5, 4, 3, 2, 1, because I'm going to draw on it. Okay. So this cheat sheet is one of the technical analysis tools or one of the ways that I use to look for my analysis. But this cheat sheet is specifically for trending markets. So either it's on a downtrend or it's on an uptrend. Okay, whatever it is, it has to be a trending market. This does not work for a sideways market. Hello, for those who just joined, mostly new people. Okay, does not work for sideways market, only trending up or down. So once I see the market is trending up or down, I will then use a channel or trend line to plot out the trend. After that, I'll pull out some horizontal levels. It can be pullbacks, overlaps, swing highs, swing lows, or Fibonacci levels to help me identify where my entry, my stop loss, and my take profit will be. So just from these three alone, I will already have a rough idea of where I'm going to go in, where I'm going to get out, and where I am going to have a stop loss. So what is the point of the rest of this stuff? The point of this rest of the stuff is to get a second opinion to get higher probability setup. So let's say I'm looking at this chart, it's trending down. I want to enter for a sell. I know where my stop loss is, my take profit, and my entry is, okay? I then look to see if there's any chart patterns that goes against that sell. Okay, it can be wedges, triangle, double top, double bottom. So imagine I'm calling for a sell, but now I see a double bottom, right? Then that doesn't make sense because double bottom is an indication of a trend reversal. Okay, it's bottoming out and it's time to reverse. Okay, then I look for any death or golden crosses. Imagine I'm calling for a sell here, but the death and golden cross is showing a golden cross. Okay, a golden cross is a signal that the market is bullish. Okay, so you're using the 200 and the 50 moving average to help you make the decision. If I cannot find a depth of a golden cross that makes sense, I will pull out a natural moving average. This is rare, but I still do it once in a while. Then I pull out stochastics and RSI because imagine I'm calling for a sell, but stochastics and RSI is showing me that there is a bullish divergence. Okay, the bullish divergence is a signal that trend might reverse to the upside. Okay, and Imagine I'm calling for a sell, but price actually just reached the oversold area. Okay, it has bottomed out on stochastics and RSI or the oscillator. So all this other stuff other than these three is just here to help you make a better decision. So once that is done, I'll see if there's any correlation, meaning using two different pairs to make my decision. And then after I'm done with all of this, I will already know if I'm going in for a reversal or a breakout. Simple. I think it's very simple, very straightforward. Even if you are a beginner, you will have no problems following this. Okay, for the benefit, for those who just joined, I'm going to stay here for one more minute. So you guys can take a screenshot, note down if I don't know. Yeah, just take a minute to digest this information here. Okay, hold on, guys. Let me know if everyone's done. If everyone's done, then I will move on. Okay, cool. Actually, you guys just where's my pen? Thank you from IC Markets for sitting through the introduction. Give me one moment. I actually pulled out TradingView already and it just disappeared again. I accidentally closed it. Give me a moment, guys. Sorry. Sorry. I said my IC Markets again, didn't I? Okay. Thank you from IC.coms. You see, the problem is I've been saying IC Markets for so many years. That's why, like, when they rebranded, I'm having a hard time remembering that they are now IC.com. It's the same group of people still, it's just that they rebranded. Okay, maybe it's because it's easier to remember when it's IC.com. Okay, I pulled out TradingView. Just give me a moment, guys. It is loading. It is not the fastest right now. In the meantime, let me know in the chat box if you guys can see my TradingView. If you can, that's all that I need to know. And if that you can hear me. If you can hear me and you can see my TradingView, that's all I need to know. Okay, give me a moment while I pull out the charts. Okay, cool. I've got my charts running. Let's look at these three charts. These are the three charts I look at every single week. I only analyze these three charts. I do not analyze anything more than these three charts. Why? Because my analysis have shown that these three charts is the one that gives me the most returns. Okay, so if I'm making money on EUR USD, why do I go and force myself to look at GBP USD, right? So stick with the things that you're used to. I am just merely showing you what I am used to and what has been working for me. Okay, so let's look at what happened last week. I think with Ethereum, I was calling for gold, short, short buy, but I did say that. Hold on, let me see what happened last week. I don't know what happened to my analysis from last week, though. It was going sideways. Okay, I don't have information on what happened last week, but it's okay. We'll just take it as it is. Okay, based on this drawing that I drew last week, I was saying that gold is going to keep going sideways for a while until it decides to either break on this side or this side. So what I can do now, because remember, the cheat sheet checklist only works on trending markets. Gold is not trending at this current point of time. It is just going sideways. It's going sideways within this triangle. Therefore, the cheat sheet checklist does not work. But that being said, there are many other ways to trade. Sometimes there's actually a cheat sheet or a strategy to use when the markets are going sideways. I'll look into this in a while to see if I do actually want to use that technique. Okay, let me see. EURUSD. So I was calling for a sell. I don't know, where are my notes? You know, every week I do these webinars for you guys. Where are my notes? I do these webinars for you guys. I will always write down a side note so that the next week when I come back and review, I know why I did the thing I did. So clearly I was calling for a sell, right? With EURUSD, clearly I was calling for a sell. But I remember very clearly that I said the one that I was hoping happen or most likely to happen was a breakout. A breakout, a retest, and a continuation. Or, or the other thing that I think was going to happen is that it pulls back. See where the red arrow is? It pulls up. Why? This is can change this to blue. Okay. It pulls up and then somewhere here enter for a sell and then pull back down again, which is exactly what happened, right? This is exactly what happened. You see this move here, but I did not put an entry. I did not put a stop loss and I did not put a take profit. I know why, because I was more biased for the yellow arrow. Okay, I was more biased that the yellow arrow was to play out, but I was saying that the other scenario would be this red arrow. Okay, looks like the red arrow did play out. It did go up and it did pull back down. Okay, it's okay, we missed it. That's fine. Let's redo the analysis for this week. Let's start with Ethereum. So I showed you guys the cheat sheet checklist. Okay, the cheat sheet checklist will show you, okay, how to get in on a trending market. So what I'm ultimately looking for right now is trend, right? It is trend. It needs to be trend that makes sense. It cannot be trend that I'm adjusting based on my own bias. So we need to be as logical and throw away the prejudice as much as possible. Okay, so there was a breakout happening here. Ethereum has been trending downwards for a while now. It's a very, very beautiful channel. Okay, but it finally broke the channel here. Is this an indication of an uptrend? Okay, a break of a channel is usually a possibility of a trend reversal. Okay, possibility of a trend reversal. But we need to also take note that why I say it's a possibility rather than confirmation. You need to remember, okay, when we're talking about technical analysis or talking about uptrends and downtrends, what constitutes a downtrend? A downtrend constitutes lower lows and lower highs, right? So lower lows and lower highs, which is what price is doing right now, right? So even though when I plotted a trend line, right, I plot a trend line and there is clearly a break of trend, we need to remember that this structure here has not broken the high here. What I need is the last confirmation of it breaking here, okay? Price needs to break this area for me to confirm. I wouldn't say confirm, to be more confident that the uptrend has started. At this current point of time, it is too early to tell if we're just using a trend line. Okay, anyways, I've shared you guys last week. I am biased for Ethereum being a sell, okay? Because remember, price is always constantly moving in a zigzag pattern, whether it's a zigzag pattern down or a zigzag pattern up, it is always moving in a zigzag pattern. So because of that zigzag pattern, I actually use the Elliott wave to analyze Ethereum already, and Ethereum is still showing me that it's still on a downtrend on Elliott wave. Therefore, combining Elliott wave with this, which I'm not able to show you guys today. If I show you guys Elliott wave, we're not going to end this webinar within 1 hour. Okay, if I show you guys Elliott wave, we'll probably be done with ETH/USD alone, one analysis in 1 hour. Okay, Elliott wave is not for beginners. There's going to be a lot of explaining involved. Okay, so first sign of possible trend reversal, but it has not broken. It has not broken the last high. Therefore, I'm not very convinced. Okay, I'm still going to take it that Ethereum is at a sell, and hold on. See, double top, double bottom, sorry. Double bottom, breaking the top. See, this is why you plot chart patterns, right? So honestly, I want to be biased that it's sell, right, based on my Ethereum, but right now, there are things showing me that it's a buy. Okay, there are things showing me that it's a buy. So I see this double bottom here. Okay, so you know what? I'm just going to do the analysis based on the cheat sheet checklist. And if I get it wrong, that's totally fine because we're just using a system, right? Sometimes the system can be wrong because the markets work on a lot of randomness. Okay, so we cannot force the market. So for a while now, Ethereum was just moving on the downtrend, right? You see, there's also a double bottom here. In fact, there's a triple bottom here. But the criteria for a triple bottom or a double bottom is that it needs to break, right? It needs to do a breakout point of the W, and then it needs to break out where this part is. Okay, so although in the past, right, you can see that price did make a double bottom or even a triple bottom here, it did not break that breaking point. Therefore, it was not a valid one. Whereas in this case here, you see it's making a double bottom, right? And price actually breaks out the middle point here. Okay, so it actually broke out. Okay, so if we are purely taking double bottoms or chart patterns into consideration, technically this is a buy, right? Technically this is a buy. Okay, so although my long-term bias for Ethereum is a sell, I would think this is a possibility of a buy because of a pullback. Okay, my long-term bias for Ethereum is that it is still going down. Okay, it's just that it's doing this, it's doing a zigzag down, but maybe this time when it's pulling back a little bit higher. Oh, sorry. A little bit higher, somewhere to the 2002 area, which is what I analyze as well. And then from there, it reverses. Okay, so there is room for movement up, but the cap is at 2002. As long as it does not break this top, as long as it does not break 2,400 area, we are still in a downtrend. Okay, as long as it doesn't break the last swing high, we are still in the downtrend. So as of right now, even though I'm biased that we are in a downtrend on the long term, I would say on the short term, there's a possibility of it pulling back up a bit higher and then from there only dropping. Okay, so therefore I am going to call for a buy. Anyone confused as what I'm saying? Anyone confused as to what I'm saying? Okay, cool. So back to the cheat sheet, I'm going to trend line is, the cheat sheet is working so well for this buy, right? It's just that Elliott wave is showing me in the cell on the longer term. Okay, so the cheat sheet again is to look for trend. After you've looked for trend, you look for uh horizontal level. So the horizontal levels, I mean, here this is a very clear horizontal level here, nice and clean. You know what? I might actually consider this a high probability setup. Very nice and clean one. Okay. This is where I think the horizontal level will be. Um, okay. I expect the buy to be somewhere here. Sorry, not sell. The buy. I'm fairly confident with this trade because everything looks very clean and very good. Okay, my take profit. I am not aiming for 2,200, although I think that's where the potential of where this pullback can go to. I do not want to aim so high. I can aim at this swing high here, this swing high here, or this swing high here. I'm always aiming for the next zone. I'm always aiming for the next zone. But for the sake of being very conservative and safe, let's aim for this zone here, the lowest possible one. Okay? So I'm basically calling a buy somewhere within this area to here and the stop loss being below it. Okay? So obviously, if I put it here, my risk to reward will be better, right? But again, let's see what the risk to reward gives us. Long. I mean, it looks like a 1 to 2, I think. It is a 1 to 2. Okay, 1 to 2, not too bad. Obviously, I try to aim for 1 to 2.5 most of the time, but I cannot force the charts to do what I want to do. Okay, let's refine the entry and let's refine the stop loss. Obviously, this stop loss, I'm giving it a lot of room. You see, I'm trying to avoid this swing low here. So, oops, sorry guys. There's this swing low happening here, and I'm trying to avoid that swing low. So I'm just going to put my stop loss right below that swing low, hoping that if prices come back, it misses it a bit. Okay, so now I'm going to find a more accurate entry anywhere within that green box. Okay, I'm gonna get rid of everything other than those that are relevant to us. Looking for 127.2, 161.8. Okay, next thing I'm looking for is 1, 2, 3. There's a lot going on this chart. So there's a lot that I can draw on this chart. I love it when this happens. Okay, not really giving me anything. Give me a moment, guys. Let me just look at this. Okay, there is an issue here. Not really an issue, but a possibility of different entries. Okay, I think price is gonna reverse anywhere from this green box, right? It could have already happened. Like this move could have already happened. I'm just saying that it might happen one more time. Okay. More specifically, anywhere within this red box, okay, and this red box here. For those who are new, I'll tell you what's happening, okay? So I've identified this green box here as the possible entry, right? But the green box is too wide, so we need to narrow down where exactly in the green box that's gonna happen. Okay, so yeah, we need to narrow exactly where that's going to happen. So what I think is going to happen is either somewhere within this red box or somewhere in this red box is where the reversal is going to happen. How did I come to this red box? How did I come to the conclusion of these two red box? Okay, so when I can, if you don't already know Elliot, Fibonacci, I cannot teach you right now because again, Fibonacci is time consuming. It will take more than one for me to get the message across when it comes to Fibonacci. So using Fibonacci, you can see that there are a lot of Fibonacci levels lining up in this red box here. 1, 2, 3. Okay, there's like 4 levels lining up in this red box. And then if you got 1, 2, 3, 4 levels lining up in this red box as well. So the more Fibonacci levels lining up in one area, the higher the chances of price reversing in that area or some kind of reaction happening in that area. Okay, so we've got 2 red boxes. Price already came here once. You see, price already came here once, and it already did the move that I'm calling right now. The question is it gonna do that move again a second time, a third time? I don't know, and I also don't think so. Therefore, I'm actually more biased to put my entry at the safer zone. Okay, so to be very safe, I'm gonna put my entry at the lower mark. Okay. Although this is a possibility as well. Okay. This red box here is also a possibility. So I'm gonna put this here. Dotted resistance. We put the text there. Okay. So this is also a possible sell entry, but I'm more biased to aim for the lower one. Okay, at this current point in time, just to be safe, just to give me better risk to reward. If it works out, I'll get really good risk to reward. If it doesn't work out, then no loss to me, right? Just no loss to me. Okay, and then my stop loss, this will be good enough. The only thing that will stop me out if it's wicks. Okay, sometimes it wicks, sometimes it doesn't wick. We just hope it doesn't wick all the way to the stop loss. Okay, the way to avoid wicking is to give more breathing room, but it's give and take, right? If you give it more breathing room, then you're losing your risk to reward. Okay, so just give it enough breathing room to hopefully avoid the wicks, but not enough that your risk to reward doesn't make sense anymore. Okay, so now that I've got my possible entry, this looks like a really killer setup, man. 1 to 5. Obviously I should aim even lower. Okay. Okay, 1 to 5. 1 to 5 is the potential of this trade. Okay, if this is the entry, if this is the entry, it becomes 1 to 1. Then I won't even consider getting it. Okay, provided you put your stop loss there. If this is the entry, the stop loss will be here. Right? If this is the entry, the stop loss will be here, right below this swing low here. And it's still 2.5. So depending on where you get in, that's where you put your stop loss. Okay. But if I get in here, this is I will be more than happy to do this setup. Okay. And it would still work because this trend line could be drawn anywhere and it still makes sense. Okay, this trend line could be drawn this way and it would still make sense. Okay, so this is a possibility. Okay, next thing is the cheat sheet checklist set to draw a trend line, channel horizontal level, which we have done. Fibonacci levels, which we have done. We've got our chart pattern. Sorry, what's the chart patterns on the bigger? Yeah, we've got our chart patterns. That was on the bigger time frame, and it shows the double bottom, right? Double bottom is an indication of a trend reversal to the upside. Okay, possible long-term trend reversal, possible short-term trend reversal. Too early to sell, say at this current point of time, but what it's saying is right now we are looking at a buy. Okay. After that we've got death and golden cross. So let's see. Death and golden cross is showing a buy. Okay, fair. Okay, this changes things a bit. I pulled out the death and golden cross. Okay, do you see this white line here? This white line is a 200 moving average, right? And this green line is the 50 moving average. So the thing about moving average that people don't really remember or they don't take in consideration is that the moving average is also a form of support. So for price to get to this lower entry, it needs to break this moving average and then come back in to break that moving average. Ideally, the moving average is supposed to work as a support or some kind of barrier. Okay, so it has to break the barrier and come back. So do you see how this moving average works as a support here? It comes, it bounces up. It comes, it bounces up. It comes here, it bounces up. Yes, there are instances where it breaks and come back up. There are instances where it breaks and come back up, breaks and come back up. But ideally, the rule for moving average is that it works as a support. So, I mean, don't love the idea of it. Or maybe I can change it. Okay, this is where I can consider using a natural moving average. See, this is a problem. What am I doing? I'm back testing. Every time it breaks a the 200 moving average, right? Okay, this one didn't really break. It broke a little bit and came back up. This one respected. This one is a clean break, okay? See? You see how in this entire area here, price did not once break the 200 moving average. When it broke, it was already a trend reversal. Therefore, it will be very bold for me, right? It will be very bold for me to assume that price can break the 200 moving average and still recover and go back within the 200 moving average. So I would have loved to see this trade work out, but actually now this changes things. That's why the other things are what helps you make a decision as well. I think we're still on the buy. I'm not changing that, right? But I'm now more biased of the possible sell entry here because of the moving average. You just think about it, right? Look at this entire thing here. Sorry. Look at this entire movement here. Not once did it break the 200 moving average. So for me to assume that it will break the 200 moving average, which is this white line here, and then later go back up again above the 200 moving average is probably very unlikely. Unless what I'm calling is that the moving average continues to move this way, right? I'm calling for a break and a retest and a continuation to the sell. Okay, so based on very textbook, I'm more biased of this, but I'm not saying this is impossible as well. Okay, either one is possible. The red scenario or the green scenario, they are both possible scenarios. Okay, what do I do? Which one do I enter? Honestly, for me, I trade 1% every single trade. Okay. When I am unsure, when I'm very confident, I enter 1% on one trade. When I'm not confident, but I still want to get into the trade because that trade still makes sense to me, I enter at 0.5%. That means on a $100,000 account, right? Instead of risking $1,000 per trade, I'm now risking only $500 per trade. Okay? So it minimizes my risk. I'm still in the than it should be. Okay, so uh Buyers for a short-term buy, just the entry could be either one. Okay. Let's go to the next one. RSI and stochastics. I mean, RSI and stochastics is really not telling me much. It's not giving me information. I don't see a divergence. I don't see I don't see a divergence. There is a bit of a divergence here. That's a bullish divergence, right? Okay, not really. Doesn't really fit. It's almost like I'm forcing it. Okay, let me see. Nobody else sees a divergence or anything, right? Okay, I definitely do not see any kind of divergence. Uh, I guess, yeah, no divergence, nothing. So RSI stochastics not giving me information that I need. What else was on that cheat sheet? Okay, let me pull out Ichimoku Cloud. It's because one of my favorites. This changes things a lot. Okay. Yeah, I'm happy. It doesn't change things a lot, but yes, I wouldn't try to aim for here. I wouldn't try to aim for here. I would try to aim for where I said I would aim for. Okay, why? Because Ichimoku cloud, this cloud works as a support and resistance as well. So to respect the support and resistance, I'm gonna keep it as that. Okay, I'm done with all the stuff on the cheat sheet checklist. I now need to pull out correlation. This correlation for ETH/USD is actually BTC/USD. They should move in the exact same direction. I'm not going to do that because I've only got 15 minutes left with you guys. We should move on to the other charts now. Okay, so this is what I have for Ethereum. Short, very short term bias is buy, but my long term bias is actually a sell. Okay, but let's focus on short term. Focus on short term. So this hopefully this little buy move works out, either the red scenario or the green. I think more likely the red scenario will work out. More bias for red arrows to work out. Okay, more bias for red arrows to work out. Okay, cool. Let's move on. Because we don't have much time left. Goal. Goal. It's moving sideways. Okay, of course it's moving sideways because it has reached a point where nobody knows what it wants to do. Okay. See, if you guys look at goal, I say this every single week and I'll say it again for the benefits of the new people. You go to goal, you zoom out, it has always been moving in an uptrend. Okay. You see, it's always been up. And it sometimes it pulls back, but most of the time it's just up. It pulls back a little bit, goes up, pulls back a little bit. This is the first time in a very long time it has done a very deep pull. So the question now is the pullback done? Do you want to continue with your uptrend now or what is it? Okay. Remember, goal is always moving in the uptrend. So when you see it going down, it is just a pullback. Okay, so it's different from Ethereum. Okay, I'll show you Ethereum. Ethereum is not constantly moving up. It's constantly moving up in a very zigzag, weak pattern. But gold, it's moving up in a strong, obvious trend. Okay, you have to be blind to not see that it's an uptrend, right? So this is a very strong and obvious uptrend. Okay, so the question now is, are you done moving up or do you still want to move up some more? Okay, so let's I'm using a line chart because that's how bad the structure of gold is. The line chart, with the line chart I can see better. Based on this, gold has reached a 38.2 area. So it's reached here. Do you want to try to go to the 50% or do you want to go back up now? That's why when you look at gold on the small time frame, it is just going sideways because even the market is confused as what to gold wants to do. Does it want to go up or does it want to go down? Because now it has reached a deciding point. Because if it goes down further, then it's going to aim for the next zone, which is the 3,600 area. Okay, but if it goes up, that means we are back into our uptrend again. We are back to riding our uptrend. So the question now is, where do you want to go? I don't have a crystal ball. I'm not going to try to predict it. I predict where gold is going. I don't have that kind of ability. If I do, I would be a billionaire already. Okay, so I've made a few 100,000 on from trading, but it's not enough for me to say I have the ability to predict when a trend is over. Okay, so let me see what I can get from gold. There's anything I can get from gold. I foresee the breakout happening soon, but that's maybe in a few days, right? I definitely see the breakout happening soon. Not right now, right? So what I want to see right now, what I'm trying to focus on right now is what's going to happen right now. So right now goal could either be reaching the end on this triangle. It means that's going to break soon. It's going to break to the upside or break to the downside. Okay. The question is which triangle is more valid? I think this triangle is more valid because we are looking at more recent time. This price was touching this triangle more recently, whereas here it's only touching one time. Then you got this like in May, then this barely touching in May as well. Okay, so I'm gonna get rid of that big triangle and we're gonna use the smaller triangle because we want information that is the most recent. Okay, based on this triangle, gold is still going sideways within this triangle. Okay, it's gonna keep going sideways for a while until it reaches like, how do triangles work? This is how triangles work. Okay, so this is a triangle that we're focusing on. This is a triangle in question right now. Okay, this is a triangle in question right now. Okay, so triangles are divided into three parts. One part, two parts, and then three parts in equal shares. Usually, price will move within the triangle until the second part, then it will consider to break out here or here. So it will at least move until somewhere here. So what I'm trying to say is, for the next few months, we can expect gold to keep ranging within this zone. Okay, that's what I'm saying. For the next few months, gold is probably going to keep going sideways. It's going to be very boring. We are probably on a wave four of an Elliott wave. Yeah, we are probably on a wave four of an Elliott wave. Okay, so am I gonna try to play the sideways market? No, the next few months, gold is out. I'm gonna come back every single week to reanalyze gold, but as of right now, there's nothing for gold for the next few months. That's the thing about sideways market, and when we're on the Elliott wave it's very boring. It will bore you out. People get upset and then they leave. Okay, that is the problem with a wave fall. But that's the thing about trading. You need to be patient. If you don't want to wait this out, you are going to get burned. Okay, you are going to get burned. You can try to play it if you want to. I definitely do not encourage it. Okay, I do not encourage people trying to play a sideways market ever because it's so risky. On the even smaller time frame, there's an even smaller triangle. Okay, do not I don't have the ability to do this, okay? I don't have the ability to try to play within a triangle. Therefore, I'm gonna ignore this, okay? I'm gonna reanalyze this every single week because maybe, just maybe by next week, there's crazy volume and it breaks out. You never know, right? Oh, it does this, right? You will never ever know. Okay, so but I already kind of know gold is just gonna go sideways. You know what? Next week you guys come back, I will show you guys an Elliott wave analysis on gold. Okay? If I show you an Elliott wave analysis on gold, you will know where gold is going. There's no trade right now, but at least eventually you will know the general direction of gold. Okay, EUR USD is still going on a downtrend. It's always been going on a downtrend. It's same as gold. Gold is always going on an uptrend. It's just where are we in that uptrend and where are we in this downtrend? Okay, buyers of a sell. The question is, where do I sell from? Right? I know I want to get in for a sell. It's just where do I get in for the sell from? Okay. It looks like it's right now actually. Ignore this trend line breakouts. Focus on the higher structure. Okay. Remember, the stronger the structure, the higher the prime frame, the more accurate the structure will be, or the stronger the structure will be. Where do I get in for a sell? Okay, I've already seen I see my sell entry. It is here. Okay, getting rid of this trend line. Okay, I expect Ethereum, sorry, not Ethereum, EURUSD to pull back all the way to here. And then from here, I will expect some kind of drop to somewhere. I haven't decided yet. Okay, probably here. This looks, I'm very happy with this setup, to be honest. Okay, give me a moment, guys. I need to, let me at least put in some of the entry points. We're looking at somewhere between 2 to 2.5. Okay, 2.5. Okay, so let's see. Obviously, if I don't give it so much breathing room, it'll be better risk to reward. Okay, but hey, give me a moment. Hmm. Why is it calling for so low though? It's saying that's really low. Structurally, okay, I'm gonna stick with this. Okay, nothing is lighting up. That's fine. We don't have to, we shouldn't be forcing it. Oh, okay. There is some kind of resistance happening here. Here. A lot of levels are lining up there. Wait, what was the point of this one again? I'm gonna get rid of this. Okay, this. I'm getting rid of everything because I want the charts to be as clean as possible. Let me take from this even a higher high. Hmm. No, nothing is lining up very well. You know how when we were analyzing ETH right? You see how the Fibonacci levels are lining close to each other. Whereas for EURUSD, I keep pulling up Fibonacci levels, but one Fibonacci level is here, one is here, one is here. It's like they're not really clustering in one area. Okay, what I wanted to see was them clustering in one area so that I know exactly where the entry is going to be, but it's not really happening. Okay, I'm gonna keep trying to find more clusters, but if it doesn't come on, I cannot force it either. Okay, there is something that's showing up. This is showing up. And it looks like price already did it. Price already got here and now it's reversing. Okay, in the very unlikely event that it comes back a second time, okay, in the very, very unlikely event it comes back a second time, I'll enter for sell, my stop loss being just above here. Okay, but because I think this is actually over already, I actually think price already came here and now it's on the way down. So I think this is over already. The other scenario that is possible is actually a breakout. Okay, a breakout of this structure. But again, I hate playing breakouts. Do not like playing breakouts at all. Okay, so that's all I have for you guys for today. Let me just finish up with a few more things. Okay, that's fair. This is not giving very accurate information. Natural moving average. Oh, signaling a buy. Hmm. This is why you pull out indicators. No worries. Thanks for joining. I was very confident with this sell, to be honest. I was gonna get ready to put a pending order in my phone. Okay, but the tech indicators was not aligning. Okay. I wanted to call for a really good sell. Okay, but I pulled out death and golden crosses and it was saying that it's a buy. Okay, it's a trend reversal to the upside. Therefore, I'm gonna mm, not get in for that sell because it's too dangerous. Okay, the only thing I'm getting in at the end of the day is this at a very low lot size. Okay, that's all I have for you guys today. Bearish divergence for Euro USD. I mean, bearish divergence is good though. It will support the sell. Bearish divergence will support the sell. I don't see a bearish divergence. Okay, but yeah, anyways, that's all I have for you guys today. I will see you guys next week. Bye everyone, take care.